Hello, trading is closed on March 4th, 2015. I'm Jeff Tennant. We had a mejt target for today of 2103.62 and the market made short work of that. I also said anything other than a gap down and promptly taking out this low should lead to higher prices. Well, the bears did what they had to do. They gapped down and promptly took out that low. During the day, about the only signals we had came in the afternoon. mejt said this rally was false and prices would retrace. They did. It said this drop was false and prices would retrace after this time, which they did. And we have no new mejt signals for tomorrow. That means we have to rely on other things. Let's take a look at the big picture and what today's action means. First of all, it's no secret I was pretty negative at year end. We got exactly the kind of action I wanted to see. This is the BP SPX. It's the S&P 500 percentage index of stocks who have favorable chart patterns, and typically when the market hangs around the highs and the number of stocks with favorable chart patterns drops, it's not good. The last month saw that negative pattern negated as we're now close to the highs again. It's not usually what happens before a big drop in the market. This is a 15-minute chart. These lines here are TDST lines from late and mid-February. It's incredible how the market found support right at those lines. There are some other intraday charts with TDST lines from time to mark. I won't show all of them, but here's a 78-minute chart. Support extends to one bar under the line. This line goes all the way back to late December, but it hasn't been superseded by any other lines, so it still is a relevant support area, and so far we dropped to support and couldn't get through it. Here's the half-day chart. Right on the nose, another TDST line, also this one from December. So we dropped to support, and so far support's held. As far as the rally is concerned, we got everything we need if you're a bear. We gapped down, took out all these lows from the whole consolidation, and then we couldn't keep it. We gapped down, hit a new low, rallied all day, and then closed over the low of the consolidation. It's usually positive when we start out low and rally all day, but it's not so positive unless we take out the middle of the day high. I think that's very likely since we couldn't hold on to the lows. I would also remind you that we have a gap down with a stilt. We now have a perfect, fully formed diamond. And even though the stilt-like move up need not occur, it's something we have to be on the lookout for as it occurs in a high percentage of the cases. If that happens, the gap fills and we overtake the high of the wall, and we find resistance at that area. I can't rule out a wishy-washy day tomorrow with the real action coming on Friday or later. But in general, I view today's action as positively biased, if not immediately reversed. If you're negative on the market, what you want to see is us to gap down, take out this low promptly. Anything's possible, but I think it's more likely that the move out of the diamond is going to be up, that we trade over this high, and if we do it strongly, there could be a pretty good rally. It's pretty much the same call as I made yesterday, and it's based in large part on the fact that the big drop couldn't keep us under the recent lows. The positive aspects of this are negated if we promptly take out this low. That's a much taller order than taking out this high, which I would view positively. And that is today's call.